Acuity provides holistic, quantifiable cyber, IT, and operational risk intelligence, enabling companies to embrace digital opportunities while remaining resilient. Through integrated qualitative and quantitative analytics and reporting, Acuity delivers insights to help businesses manage risk effectively. We have a laser focus on what good cybersecurity looks like, and that is we're resilient to loss events. We can't avoid them, but we want to make sure that they're tolerable. We certainly want to avoid cyber catastrophe. We want to use resources effectively and efficiently, focusing on the risks that could cause us the greatest harm and in proportion to the level of those risks. We want spending to be optimized, providing value for money from cybersecurity. We want to understand the need for investment and understand the return from that investment. We want to understand the risks associated with digital transformation and make risk-informed strategic decisions. And overall, the board wants confidence that cyber risk is under control. The global strategic management consultants McKinsey has identified that most organizations take a maturity-based approach to cybersecurity, which is focused on building capabilities, but results in untargeted and unmanageable growth, escalating costs, and implementation gridlock. McKinsey identified the next evolutionary stage as the risk-based approach, which focuses on aligning with the board's targets for risk reduction, optimizing defenses to address the risks of greatest concern, and reducing overall costs by taking a targeted approach. Cyber risk is continuous. It's not a project risk that can be identified, assessed, treated, and closed, nor is it a risk that can be reviewed once a year. It's an ongoing operational risk that changes all the time. Events happen that increase our risk, such as new or increased threats, new vulnerabilities, or controls becoming ineffective. Similarly, things happen that can reduce risk. Threats decrease, vulnerabilities are remediated, weak controls are improved. Over time, our risk increases and decreases, and if we understand our tolerance for risk, then at times we'll be above tolerance and other times below tolerance. If our risk remains above tolerance for any length of time, there will be an increased likelihood that we will suffer loss events that will be intolerable to the business. This is likely to result in unbudgeted expenditure, reputational damage, and other impacts. And ultimately, our business performance against targets will deteriorate. So operating above our tolerance for risk is a leading indicator of future unbudgeted expenditure and deteriorating business performance. To achieve good security outcomes, we need to do 4 things very well. We need to pull all relevant risk information together and centralize it so that we have visibility of what's going on. We need to quantify our risks in financial terms so that we can compare against management's tolerance and evaluate the return on investment from new security products and services. We need to automate our response to change so that we can see when risk goes above tolerance and take appropriate action. And we need to build confidence by reporting in a language that business understands. To see what's going on and to put our arms around the cyber risk problem, we need to bring together data from multiple sources, typically from spreadsheets, SharePoint, or other disparate systems. In our Stream Integrated Risk Manager platform, all information about a risk is brought together on a single page. This is data leakage of UK customer data via email. Quantitative risk assessments have been made for all risks within UK trading. These risks can be aggregated for UK trading together with those for Germany and Italy and aggregated for Europe overall. This chart shows, for example, that within Europe there's an approximately 50% chance of losing more than 10 million euros in the next 12 months. Management's tolerance for risk within Europe is shown by the dotted line, and we're currently operating above tolerance, which, as we know, is a leading indicator of future deteriorating business performance. So we need to take action to bring risk within tolerance. We can model the effect of introducing new cybersecurity solutions, such as enterprise data loss prevention. This reduces the probability of losing more than 10 million euros in the next 12 months from 50% to less than 5%. We can compare this against the cost of deploying enterprise DLP and evaluate the return on investment. The green line indicates potential risk if we can increase the performance of our other existing controls, and if we do this, we'll get close to our tolerance for risk. Taking another example of Chicago, Chicago is currently operating approximately within its tolerance for risk. But look what happens if we let our patch management slip. Suddenly we're operating way above our tolerance for risk. We can also use this technique to evaluate the impact of budget cuts and target them where they can be best tolerated. Acuity with Stream can deliver the good cybersecurity outcomes that boards are looking for. Stream also delivers integrated risk management by seamlessly centralizing, quantifying, automating, and reporting across all of these applications, delivering fast time to value within weeks via either our SaaS platform or on-premise deployments.